Welcome to the deep dive. Today, we're taking a closer look at Taiwan's economy.
That's right. We've got some interesting reports here. Academia Sinica forecasts, market news, supply chain analyses. Quite a bit to unpack.
Exactly. And our goal, really, is to pull out the key insights for you. What's driving things? What are the, potential bumps in the road or opportunities without getting bogged down in endless data?
We'll be looking mainly at the first half of 2024. Academia Sinica's review gives us a good grounding there and their forecasts for the rest of 24.
Right, but we'll also touch on some really recent stuff, market moves from, early May 2025?
Yes, exactly. Just to keep things as current as possible.
Okay, great. So let's jump in. That first half of 2024, it sounds like it was actually surprisingly strong for Taiwan.
It really was. The first quarter, Q1 2024, saw real GDP growth hit 6.56%. That's,
Right.
well, it's pretty robust.
Yeah, higher than expected?
Definitely higher than many initial forecasts. It was strong enough that Academia Sinica actually bumped up their projection for the whole of 2024 to 3.88%.
Okay, so what was behind that strength? Was it exports?
Exports were a huge part of it, yeah. Global trade started picking up again, which helped. But the real kicker was the demand for advanced tech.
The usual suspects, AI, high-performance computing, that sort of thing.
Precisely. That demand just, it supercharged Taiwan's exports and consequently its industrial production, really underlines their position in that high-tech space.
Makes sense. Can we break down that export growth a bit? Was it strong everywhere?
Not really, no. It was quite concentrated. Information, communication, audio-video stuff. That sector saw growth of, wait for it, 117.63%.
Whoa! Okay, 117%. That's massive.
It is. Meanwhile, your more traditional sectors like chemicals or plastics saw maybe 1-3% growth. Some others, steel, transport equipment, actually declined.
So really a tech-driven export story. What about inside Taiwan? How is domestic spending?
Also pretty solid, actually. Real private consumption was up 4.45% year-on-year in Q1. People were spending.
On what specifically?
Things like dining out, travel, leisure, transport. And retail did well, too. Cars, general goods, e-commerce were all up over 4% in the first half. Catering saw growth over 5%.
So people were feeling confident enough to spend.
It seems so. The Consumer Confidence Index was trending upwards. You had a stable job market. The stock market was doing okay at that point.
Right.
And some government tax reforms might have helped put a bit more money in people's pockets, too.
Okay, so strong exports, decent consumer spending. Sounds pretty positive for early 2024. Any weak spots?
Well, private investment was a bit more cautious. It actually decreased by nearly 8% in real terms in Q1.
Huh. That seems odd, given the booming tech exports. Why weren't businesses investing more?
Yeah, particularly in manufacturing, spending on things like machinery, and especially semiconductor equipment imports was down quite a bit.
So why the hesitation? Global uncertainty.
That's the likely explanation. Businesses were probably just being a bit careful with big capital spending plans, despite the strong demand.
But is that expected to change?
Academia Sinica thinks so. They're forecasting a rebound in the second half of 2024, partly due to what they call a low base effect.
Meaning comparing against a weaker period last year makes this year look better.
Exactly. That, plus the ongoing demand for tech, should lead to about 0.86% annual growth in private investment for the whole year.
Okay.
And government spending on infrastructure will help too. Overall gross fixed capital formation is projected to grow about 2.16%.
Gotcha. So a bit of a lag on investment, but expected to pick up. What about the overall trade picture? Exports versus imports.
Right, so in Q1, exports grew 9.11%, while imports were only up 0.84%.
A significant difference.
Yes. For the full year, considering base effects and pricing, they're forecasting export growth around 8.5%, and import growth around 8.2%. Still points to net exports adding positively to growth.
And inflation, always a key concern. How are prices looking?
In the first half, the CPI increase averaged 2.27%. Core CPI, which strips out volatile food and energy, was just over 2%.
Manageable numbers, then.
Seemingly, yes. The forecast for the full year is similar, around 2.21%, though there are some pressures.
Like what?
Electricity prices went up in April. Service costs dining. Med dollars are rising, housing prices feeding into rents, public sector pay rises, even things like potential typhoon impacts later in the year.
Okay, so things pushing inflation up. What about producer prices?
The PPI is expected to grow about 1.26% for the year. Again, electricity costs, but also rising prices for electrical equipment and electronics components play a role.
Right. So some inflation, but not runaway. How did the job market hold up?
Quite well, actually. The service sector was strong, creating jobs. The average unemployment rate in the first half was low, 3.36%.
Better than the year before?
Slightly, yeah. And the forecast for the whole year is pretty much the same, 3.38%. A tight labor market definitely helps consumer confidence.
And quickly, the money supply figures, M1B, M2.
Both showed pretty robust growth in the first half. M1B up 4.85%, M2 up 5.97%. Suggests plenty of funding activity in the economy. Four-year projections are slightly moderated from that.
Okay, so overall, Q1 and the first half looked surprisingly good. But Academia Sinica flags some risks for the second half of 2024, didn't they?
They did, yes.
Oh.
Several big uncertainties loom. One is how quickly major economies tighten monetary policy that affects markets, exchange rates.
Okay.
Then there's the U.S. election outcome, always unpredictable, and what that means for U.S.-China relations, trade, supply chains.
A major one, for sure.
And finally, just general geopolitical risks or even extreme weather hitting commodity prices and feeding inflation globally.
So a lot that could still change the picture.
Exactly, which is why their forecast has that wide confidence interval for 2024 growth, somewhere between 2.5% and 5.3%, roughly.
Yeah.
It reflects that uncertainty.
That is a wide range.
Okay.
Let's pivot now, fast forward to May 2025. Some really dramatic stuff happened with the Taiwan dollar, right?
Oh, absolutely. On Friday, May 2nd, the NT dollar just surged. It gained over 3% against the U.S. dollar in a single day.
3% in one day. That's huge for a currency.
It really is. It hit its strongest point since early 2024, NT $31.14 a day. Apparently the biggest single-day jump since way back in 1988.
Wow, since 1988, what on earth caused that?
Well, the central bank actually stepped in to smooth things out a bit. They pointed to a few things. There was speculation, media talk about the U.S. maybe wanting stronger currencies from trading partners in tariff talks.
Linking currency to trade negotiations?
Kind of, though the central bank governor said the U.S. Treasury hadn't actually asked for that, but the speculation was out there.
Okay, what else?
The Taiwan stock market had a really strong day, too, and that pulled in a lot of foreign money net buying of over NT $40 billion.
So strong capital inflows.
Yes. And the central bank also noted that, relatively speaking, the NT dollar had been pretty stable compared to other major currencies recently. So maybe some catching up combined with the speculation and the stock market surge.
A perfect storm, almost. But a jump like that must have immediate consequences for businesses, especially exporters.
Oh, definitely. Big names like TSMC and UMC quickly warned about the negative impact on their revenues and profit margins.
Right, because their overseas earnings are worth less when converted back.
Exactly. TSMC put a number on it, said every 1% the currency strengthens could knock about 0.4 percentage points off their operating margin.
Ouch. Did they change their forecasts?
TSMC actually maintained its Q2 revenue forecast, but that was based on an assumed exchange rate of 32.5, which was weaker than where the dollar suddenly jumped to. UMC just mentioned they use hedging strategies.
Natural hedging, yeah. Trying to balance costs and revenues in different currencies.
Right. It just shows how sensitive these globally focused companies are to the exchange rate.
So the classic double-edged sword of a strong currency then. Good for importers, maybe helps keep inflation down.
Correct. Makes imports cheaper.
But it hurts your export competitiveness and can cause big FX losses if it goes too far, especially for an economy like Taiwan's.
Precisely. Analysts were saying if it sustained a move much stronger than NT $30 to the US dollar, that could cause real pain for exporters. And it creates issues for others too, like life insurers holding lots of foreign assets.
Right, valuation risks there. Were there any other market whispers about why the currency moved so much beyond what the central bank mentioned?
Yeah, some other factors were cited too. The earlier strong economic data we talked about probably played a part.
Building confidence.
Also, growing hopes maybe for U.S.-China trade tensions easing slightly, and strong earnings from U.S. tech giants, which boosts sentiment for the whole supply chain.
Okay.
And then there were more technical factors, reports of local exporters selling U.S. dollars they were holding, and maybe ETF managers selling USD because their Taiwanese clients were pulling money out of overseas investments.
So a whole mix of macro, sentiment, and specific trading flows.
It usually is with these big sharp moves. Yeah.
Okay. And you mentioned the stock market surged on the same day. The TIEX.
Yes. The TAIEX jumped 2.73% that Friday. Closed over 20,700, its highest since late March. It basically clawed back all the ground lost after those earlier U.S. tariff actions were announced.
So the stock market liked whatever was happening too. Was it the same drivers as the currency?
Largely, yes. Those strong U.S. tech earnings, particularly Meta and Microsoft, really seemed to fuel confidence in AI demand. That's key for so many Taiwanese tech firms.
Right, the suppliers.
Exactly. Plus, maybe some bargain hunting after the recent dip on tariff worries. and that general risk-on mood tied to hopes of better U.S.-China relations.
Which specific companies or sectors did well?
TSMC was a huge driver again. Its stock was up over 4.5%, helped by positive broker reports out of the U.S. and its ADRs performing well. That alone added a lot of points to the TIX.
A heavyweight.
Definitely.
But
other AI-linked names did well too. Hanhai, Quanta, Wistron, Gigabyte. And interestingly, some green energy and heavy electrical stocks hit their daily upper limits, possibly linked to upcoming summer electricity demand and maybe Taiwan's energy policies. Robotics stocks also kept climbing.
so quite broad, but tech and AI were central. Any areas lag behind?
Media tech actually fell quite a bit, maybe on some lingering worries about global smartphone demand. And the financial sector saw only small gains, so not everything was flying high.
And foreign investors, were they buying?
Yes, foreign institutions were net buyers that day, adding to the rally. Overall, it was a strong week for the TIX, recovering those prior losses.
But still some caution out there watching the Fed, potential new tariffs.
Always. Analysts noted the recent U.S. GDP contraction as something to watch, and the upcoming Fed meeting is key. Plus, worries about potential new U.S. semiconductor tariffs possibly coming in May 2025 haven't gone away. Short-term relief, maybe, but underlying risks remain.
Okay, so zooming out from the daily market moves, let's talk about those broader tensions. U.S., China, China, Taiwan. They cast a long shadow, especially over supply chains.
They absolutely do. The fundamental disagreement over Taiwan's status, China's sovereignty claims versus Taiwan's self-governance. It creates ongoing tension.
And China's military activities.
Yeah, things like those large-scale drills back in May 2024, they definitely raise concerns about potential conflict. And any instability there has massive global economic implications.
How direct is that impact on trade?
Extremely direct. The Taiwan Strait is one of the world's busiest shipping lanes. Half the global container fleet goes through there, including almost 90% of the very largest container ships.
Wow, I didn't realize it was that high.
Yeah. So any disruption, let alone conflict, would be catastrophic for global trade. And the South China Sea nearby is also critical. Trillions in trade pass through there annually.
So the economic cost of a conflict would be enormous.
Staggering. One estimate suggested a full-scale invasion could knock nearly 3% off global GDP. And rebuilding supply chains and business confidence after something like that, it would take years.
And then there's the semiconductor piece. Taiwan's role there is just critical.
It's hard to overstate it. Taiwan accounts for, over 60% of global contract chip manufacturing, and over 90% of the really advanced cutting-edge chips.
The ones needed for AI, 5G, everything.
Everything modern, yeah, from phones and computers to cars and medical equipment. So if Taiwan's chip supply gets disrupted...
We saw a preview during the pandemic shortages, didn't we?
Exactly. It would mean worldwide shortages, soaring costs, huge losses for countless industries. Taiwan's position here is just pivotal for the modern economy.
Which explains why governments everywhere are suddenly very focused on semiconductor supply chains.
Precisely. Things like the GPS Act in the U.S., the European Chips Act, they're all about trying to build more domestic production capacity and reduce that dependency on Taiwan, or at least diversify the risk.
Like the TSMC plants being built in Arizona with U.S. government support.
That's a prime example. It's a major strategic push globally to make semiconductor supply chains more resilient.
Right. Okay, one last area to touch on. Amidst all this global turbulence, Taiwan itself has been trying to innovate in its own capital markets, hasn't it, with the stock exchange?
Yes, that's right. And actually, despite all the global uncertainty in 2024, Taiwan's market performed remarkably well. The TAIX was up over 28% for the year.
That's huge. Second only to the NASDAQ.
Apparently so. Market cap hit records, trading value hit records. They had the most IPOs in a decade. It shows the underlying strength, especially in tech, which has been the focus since the Hsinchu Science Park really took off in the 80s.
And they have that specific board now, the Taiwan Innovation Board.
Yes, the TIBI. It's specifically aimed at attracting innovative companies with high growth potential. They've actually made it easier to access recently, getting rid of some restrictions for investors.
What's the goal there?
The idea is to really build up the innovation brand, attract more investors, big institutions and individuals, and use it to help drive Taiwan's whole economy forward, keeping that focus on tech and innovation.
Ambitious plans.
Very. The Taiwan Stock Exchange wants to be seen as a top global exchange, positioning Taiwan as this technology island and the go-to place for innovative Asian companies to raise capital. It's about fostering that next generation of tech leaders.
Okay, so let's try and tie this all together. It sounds like Taiwan's economy started 2024 surprisingly strong, mostly thanks to that global tech demand.
Right, but with some clear uncertainties clouding the second half.
And then these recent, very dramatic moves in the currency and stock market in May 25 show this wave of optimism, maybe around tech earnings, maybe easing trade tensions.
But that strong currency immediately creates headaches for their exporters, doesn't it?
Yeah, that tension is clear. And all of this plays out against the backdrop of Taiwan's absolutely central role in semiconductors, which puts it right at the heart of global supply chain security debates and geopolitical maneuvering.
And internally, they're pushing ahead with initiatives like the Innovation Board to keep that tech engine running. It's a complex mix.
It really is. So maybe the key thing for you, the listener, to think about is, how does that tension play out long term between benefiting from massive tech exports, but potentially dealing with a stronger currency that makes those exports more expensive?
Yeah. How do Taiwanese companies navigate that competitiveness challenge? And what happens next with U.S.-China relations, or with these global efforts to reshape semiconductor supply chains? Watching those developments seems crucial for understanding where Taiwan's economy heads next.
Definitely some critical questions to keep watching. If you do want to explore more, maybe keep an eye on global tech demand trends, track those U.S. and European semiconductor policies, and of course, stay updated on any geopolitical shifts around the Taiwan Strait.
Good points.
Okay, thanks for joining us for this deep dive.